In this episode of REI Jam Session, Clint and I will be covering our weekly recap. This is a review of life in the trenches as real estate investors, and we're going to cover all of our latest deals, dollars, and dilemmas. More about our recent obsession with the owner financing model, especially in today's uncertain real estate market, and the investor's quest for private money, and why we feel that investing in private real estate loans has more upside than ever when compared to the stock market. And finally, rebounding from disaster, how we are still dealing with the aftermath of Hurricane Harvey and what we are doing to rectify our costly mistakes. All this and much, much more.
Welcome to Cal and Clint's Real Estate Investor Jam Session. Each week, these rockstar investors are going to pull back the curtain and give you an all-access backstage pass into the realities of their real estate investing business. They'll be sharing knowledge, discussing challenges, and talking all things real estate investing. Are you ready to jam? Here's your hosts, Cal Ewing and Clint Rogers.
All right, Clint, how's it going?
Doing good. How are you doing today, Cal?
I am awesome. I am digging the Houston Astros hat. It's a good week for flaunting that.
I didn't find the broom. I should have broke out the broom today for the sweep.
Yeah, so if you guys are watching this late, the Astros just swept the Indians in the first round of the MLB playoffs. So we are all jacked.
You're excited about that for sure.
Man, this is the most wonderful time of the year for me. All I do is watch baseball. It's hard to buy houses when all it is baseball all day long.
That's right.
But that's the goal, right? My goal eventually is to be able to take all of October off and have my company working behind me. That's why you want to do it too. Well, you're not as much into baseball, but that's the goal, right? We want to be able to do what we want. And if that means
that's right.
Sport, that's what we do.
My beautiful bride, she's a baseball lover. So if I can keep her in stadium seats, she'll be happy all the time.
Absolutely. Nice sign, by the way.
Oh, thank you so much. This is what we have going on right here. This is Bruce credit. Okay. All you got to have is 10% down. We'll get you in a house. We can work with marginal credit, foreclosure, stuff like that. Just have a job, be able to pay. We don't want to put people in houses that they can't afford or can't pay for. But you know, there's a lot of people that business owners, big client for us that, maybe haven't had their business season for 2 years yet. They don't have the tax return so that they can get traditional financing. Those are people that have plenty of cash flow and can afford to put the money down on the house. They just can't get traditional financing. So we can help them out with that.
Yeah, and I mean, you and I are really in the same boat as those people. We're business owners, and we've been going for a few years now. But I mean, going to a bank and getting financing right now is pretty tough for both of us, just for that reason, right? So there's a lot of people out there that need things like owner financing if they want to be a homeowner, correct? So
exactly, and what I find more times than not is with business owners. You've got to keep your taxable income as low as possible. So even though they may have good credit, they may not be able to show the income that it is required to qualify for a house. It's not just that they haven't had long enough business. Their business hasn't been in going long enough for over 2 years to show the tax returns. They might have, $200,000, $300,000, $400,000 pass through their hands in a year, but they may actually only be reporting or showing $40,000, $50,000, $60,000 on their taxes. I tell people all the time, if you don't tell Uncle Sam that you make it, banks they're not going to listen to it. You don't make it if you don't report it in the eyes of the government and the banks. So
it's a conundrum for people, right?
Mm-hmm. Yeah, it really is.
Do something like buy a house and get a loan. Right? Even if it's rental properties, things like that. Yeah. And I mean, in my case, I'm a Canadian citizen, but all of the houses that we've been buying are in Texas. So, I mean, I've been even more in that boat, like getting financing on a rental property is pretty tough for me. So again, owner financing is something that we're offering our clients, but man, it fits the bill for a lot of people in various situations. And there's a lot of value that investors bring to those people.
Exactly.
Yeah.
And it makes it affordable. It's that we're not asking anything, and often we're not asking as much. We only want or require 10% down. There's a lot of traditional financing that still wants 20% down.
Yeah. Yeah. So let's even back up a little bit here for people. So we are extremely pumped on this strategy of owner financing. I mean, it's nothing new. But I think more and more we're seeing people that are starting to switch to this model of house dispositions instead of rentals and things like that, or instead of flipping, or just as an additional strategy to your business of doing real estate is this owner financing model. And Clint and I really, really like it because what we're able to do is we're able to pay a little bit more for houses than other investors that are maybe doing fix and flips and things like that. So we're able to be really competitive in the market. And then what we're doing is turning around and owner financing these houses to the people like we were just talking about, right? And
Exactly.
I think a lot of people think, well, people that can't qualify for a mortgage, well, those are the people that, they don't have it together and they're tough to deal with. If the bank won't touch them, then why should we? But I mean, that's just not the case. There's definitely people that maybe are irresponsible and that kind of thing out there. But there's a whole group of people that this is perfect for, and we would love to do business with them because, I mean, they're making solid incomes. They just need a chance to be homeowners too. So this helps those people, and it's awesome.
Exactly.
Yeah. Yeah. So, I mean, that's what we're thinking. And also we're feeling that the market's starting to head the other way. And I'm sure you guys are seeing it too, more and more in even the more mainstream media. There's articles out. Like, what were you saying about Atlanta?
So 30% of the houses listed in September in Atlanta have lowered their prices.
They've lowered their prices, 30%.
That's a huge number.
Yeah.
Definitely, I feel like it definitely shows the swing has started. And, if everybody just needs to be cautious of that. The buying frenzy, as we've seen in other bubbles, I don't know if this classifies as a bubble or not, but it may just, it's definitely a market turn.
Yeah.
And it's once it starts, it's headed in that direction.
Yeah. And I think that's where, when you notice a market is hot and at its peak, when every single person you talk to is a real estate investor, from your cab driver, your cab driver's dog, and everything in between, right? So when real estate investing is a hot topic and everyone is doing it, and the traveling road shows that are teaching it are everywhere, things are going to eventually start turning the other way. And what are you going to do as a real estate investor to survive, right? This is what makes and breaks a good real estate investment company. And not everyone is going to survive if the market heads in the other direction, or they're just going to get scared away once they see home prices declining instead of going up like they have for the last 10 years, right?
Mm-hmm. Mm-hmm. That's exactly right.
Yeah. And so this is why we are really actually excited if the market should start going down, is we're just changing our methods and models a little bit. But we're really excited about it happening because there's just, in every market, there's so much opportunity, as long as you know how to capture that opportunity and make money from it, and still providing value to the market. And so this is why we're really excited about the owner finance model, is more and more banks are going to start tightening up, and people aren't going to be able to qualify for traditional bank mortgages. And so our client base, our buyers, are actually growing in number as things start heading the other direction. Right?
Mm-hmm.
So it's going to be easier and easier, I think, to acquire houses, and then we're able to hold on to them as a lender by financing them to other buyers, which is amazing. Yeah. So yeah, let's recap our week. So this is episode 2. So we're definitely learning as we go. So yeah, let's just recap what's gone on since our last video here.
Okay, so we'll start at the front. I believe we started off last week talking about, we had a house in in Missouri City that we were having some troubles with the realtor wasn't really wanting us to market the house, but we were able to turn that situation around. We sat down and really explained to him, why we do it. And he understood that, we need to start marketing a property as soon as possible because there's holding costs involved. And if we have to wait 30 days to start marketing a property, then that's added expense. That's more days on market. That it really doesn't fit. It's not efficient for our business model. So we didn't intentionally, this was a great house. We really wanted to place it inside of our buy and hold
owner finance
module. Yeah, our owner finance module. So, but whenever we threw it out there on the market, we had a guy call us. He offered us a very fair price with he closed quickly. In fact, I think we're closing tomorrow or the next day on this house already. Everybody's happy on it, and what they say, a bird in the hand is worth two in the bush. So we went ahead and took this bird and cashed in on it, and we'll be able to make money for us again more quickly. So it's a win-win for us.
And that's the great thing about real estate is like you can have multiple strategies in play at once, right? So we were originally hoping to buy this and sell it with owner financing and collect the interest over 30 years. But we had a cash offer that we felt like we couldn't refuse. And 2 weeks, we're getting a paycheck, right? So that's the great thing about this is there's more than one way to do it.
Exactly. And we met another great potential partner in the future, the guy that we sold the house to. He's in basically the same business as we are. But it just goes to show how you don't have to, whenever people are in this industry, there are ways for us to always work together. You don't want to have a closed-minded attitude against people and consider them to be competition, because there's a lot more opportunity out there if we work together, because even though we may be in the same industry, we may be at different positions in our business. And so sometimes you may be cash heavy, sometimes you may be inventory heavy. And if you find someone else that you can work with, there's often a lot of opportunity to joint venture and to help each other out, and everybody can make some money. So he's a real great guy. I'm glad to have met him.
Yeah. So we've got 2 houses that we're buying right now from wholesalers. And then we also just wholesale the house, right? So, I mean, there's just not one way to do it. And that's the great thing about it is we're buying from wholesalers, we're selling wholesale, and we're keeping some for owner financing. And that's what I love about this is like every deal, you just never know what's going to happen. And you can, as long as you have more than one exit strategy, man, you're golden. It just depends on how it pans out. So
exactly.
Yeah. So speaking of another deal, we had that fire damaged house last week. We were really confident that we were going to get.
We thought we had it. But, sometimes you just don't. We feel like we offered a very fair price, for our strategy that we had in place for that one. Someone came in and outbid us by, $6,000-$7,000. Which on a property like that is a huge chunk of margin that we just couldn't compete with. So here's the thing on this one though, is we have a theory on it that if there's a lot of people out there, Cal mentioned earlier that we have the market's flooded with wholesalers right now. So many of them don't really know how to value a deal. They're in this because they think that, you can be successful in this industry without having any money to put down on houses. But what they're doing is they're just simply shuffling around paper. They're getting a house under contract and then trying to find someone else to assign that contract to during the option period. The problem is that if you don't do a good job of your due diligence and valuing these properties, and you can go in and you can get contracts all day long offering too much for them, but can't perform. And that's what we feel is likely to happen on this one. We feel that it's someone who didn't value the house properly. They got it under contract, And what happens for us so often, Cal? They come back to us, half of the time, it seems like, when we lose a deal.
Yeah, well, I remember, Clint, when you first joined on,
Uh-huh.
and we had this one house and we lost and we got outbid by a lot. And I said to him, like, nah, don't worry. This one's coming back to us. There's no way someone's going to buy this for that price. And sure enough, a couple of weeks later, she called us back and said, yeah, the guy we were going to sell it to couldn't perform, walked away from the deal. So I want to take your offer. So sometimes it's just patience and knowing when you know that your numbers are solid as a wholesaler and as a buyer, when it's probably going to get sent back. And
Exactly.
it's just following up with that seller. And a lot of those deals you think are gone, they come back sometimes. And so you just got to be patient, right?
Exactly.
Yeah. So we'll see. Maybe in a future episode, we'll talk more about that fire damaged house.
Yeah, we'll revisit that one. Hopefully it comes back. We really want it. And then we have the little Sunnyside house, the little red house that we spoke last week about the lady. She, just to slightly recap, she had a boyfriend for 30-something years. He passed a year ago. The house didn't get left to her. So the house essentially, it wasn't hers, but it got sold out from under her. So she's having to move. This has been very difficult on her, but we found from the person that we're buying from, she's actually stepped up and is helping the lady move and find a new place. They were moving on Sunday. They're finishing moving up today. We should have access to the house tomorrow, so we can start showing tomorrow and pretty much whenever we want to. So here's another one that the story's not over, but the story is good right now. We've got everything is moving along at the speed we need it to, and we're excited about finding someone to put into this house.
Yeah, and I think that's what a lot of people in this industry, not a lot, but there's people in this industry that they're really only looking out for themselves. Or maybe they just don't think it through. And you get situations like this one where you've got pretty much a helpless person living in the property with nowhere to go. And they really didn't plan for how they were going to help this lady, And so we were looking at buying it, and this occupant is in there and she has nowhere to go. So what do you do? Like, the people that were selling it needed to have a plan. And we actually had to coach them a little bit to really get them to step up to take care of this woman, because she wasn't going anywhere. She had nowhere to go, and she needed someone to come in and basically pave the way for her to go somewhere.
Right. And she had no means to move.
Right. Yeah.
She couldn't afford to move if she had to. So fortunately, the lady that we're buying the house from stepped up and really made the thing happen.
Yeah. Yeah, and then we've got another one here that we thought we lost that just might be coming back to us again. Remember, we thought we got outbid, but we might be putting another one under contract today. So that's really cool.
That's exciting.
Yeah. So Clint and I were talking a little bit earlier about some of the challenges we have with our owner financing model, and that is using private money to buy houses. And I know that a lot of investors out there, I mean, that's a common problem, that people need money to buy deals, right? I mean, that's one of the pieces in this puzzle. And that's why a lot of people resort to wholesaling or signing contracts, because you don't need the money to close on deals. And they're really missing out on a lot of profit potential when you can't close all the time. So we were just talking about how, again, the market where it's at right now, people are it seems like stock market crazy. And the more and more we're seeing in the news and things like that, we really feel, again, that there's a major bubble happening in the stock market. And it's just so funny how people are not interested or don't know anything about private lending, investing in mortgages on real estate, yet they're so willing to just throw their money into the stock market and it's basically gambling, right?
Right.
And what investors like ourselves and so many out there are offering is a return that is stable. It's tied to a secure piece of property, a physical thing of value. And usually it's worth much more than their investment. And people just don't know about it, or there's just no real public knowledge about this strategy. And it's kind of mind-boggling.
Well, I agree with you. And that's what I try to understand. And I think we're all probably guilty of it at some point in our life.
Yep.
Before I understood about real estate investing, I mean, my eyes have been completely open. And now the stock market just seems, it seems like Vegas is better odds almost than what the stock market is. But the machine makes you believe that you can play the stock market and that you can win and that it's a long-term strategy. But the truth is that the returns, even in a best case scenario, the returns are so low, it is still difficult to build any wealth in the stock market. Whereas in real estate investing, just coming in as in private money, you know what your return is going to be. It's 2, 3, 4 times what you would get in the stock market, and it's backed by something real. So it's I got to admit that that there was that time when I thought that I wanted to learn about the stock market and play and get rich, but try to find someone who did that, and try to find someone that's done that since the .com boom. It's just, there was a little window where it was real great, and there's been windows throughout history when it was great. But historically, it's just doing a little bit better than putting money in the bank.
Yeah. And I've actually pulled up some headlines. I save headlines whenever I find them. These are from August, but I'll read some of them to you. Today's stock market more overvalued than ever, based on this metric called the composite liquidity indicator. When risk returns, waiting for the collapse of the international financial charade. The mainstreamest of all, USA Today, America on a path to fiscal ruin. All sizzle, no steak, bloated stock market returns obscure real economic decay. Like, there's just so many of these articles now that I'm seeing, and it's scary, man. Like, it's crazy that people are still just throwing their money, not really knowing what they're doing, either with a financial planner or whatever it is. But I think things are going to turn around for the real estate investors out there. If things go bad in the stock market, there's going to be a lot of people looking for alternatives, and that's going to be great for us as investors because we're able to provide something that is stable and, like you say, tied to a fixed asset. They know what they're getting and they have control. You know what I mean? So if you invest in some company and they go belly up, do you get, one of their work vehicles back or something? If things go bad, do they send you one of their work trucks or something? Like, nothing, right? It's gone. And at least, with this model, I mean, when we use private money to buy houses, if we're not making our payments, they get the deed to the house. And that house is worth quite a bit more than what their loan is, right? So, I mean, it's to me, I like it better than rental properties. Obviously, we have more of an active income strategy right now, but you're not going to see me buying too many rental properties in the future. I would rather lend it. Right. All the headaches are gone. You're secure. You don't have to worry about it. You don't have to worry about the maintenance and all that stuff. So this is something that we've been, this is a big challenge for our business, is finding private lenders to come on our deals, and I'm sure that a lot of other people have this problem. It's like, what you've got is good. It's just getting it out there in a culture that isn't really friendly to it, and basically coaching and teaching people the benefits of it, right? So
exactly. So all of you watching this today, if you know anybody out there that's in the stock market real heavy, or if you know anyone that could use a safer, higher return on their money, please forward this to them, share with them, let them know, because there's smarter things to do with your money and safer things to do with your money than putting it out there in the stock market and other risky ventures. Yeah.
Or just get to know, like, if you are one of those people, like, just get to know the investors in your area, because they have something that they can a really great investment opportunity. And it's more about vetting them as a company and as people than anything else, right? It's all about making sure they know what they are doing. But if you can establish that, then it's a great place to park your money, especially at a time like this. So
that's right.
Yeah. So the other thing that we've got going on right now is we're still feeling a little bit of the aftermath from Hurricane Harvey ourselves. And it's been about 14 months since Harvey hit. Back before Hurricane Harvey, we ended up buying a few houses that were actually in flood zones, and that's my bad. We were going to do a couple flips, properties that had flooded in the past, but felt like, what are the odds, right? So we made some mistakes buying houses in areas we figured, what's going to happen? It's going to be 3-4 months to do the remodel. We're going to get it sold. The comps are great. Houses are selling fast in the area. What are the odds, right? Well, I learned the lesson pretty hard. And we had especially one that ended up flooding during Hurricane Harvey. And the area flooded really bad, and it really took a major hit in value. And so this is, every investor has their lessons they have to learn. And this was my big lesson for sure, which is something I'm never going to do again. But we have this house now that we've remodeled a second time after the flood. And it's been just sitting on the market with all of the other newly remodeled Harvey floods. And all these houses are just sitting there. And, we used hard money on it, and as well as a private lender to finance the deal. And so it's eaten us for sure. Those costs to hold those properties, or that property, it's been a big strain on our business, right? So the cool thing about real estate is there's just so many ways that you can, so many ways to really get out of trouble, right? You can be creative with this business. And so what we're actually doing now is we found a lender that's they have a product for wrap mortgages. And so they're going to refinance our Harvey flood, and they're allowing us to bring in an owner finance buyer. So we're basically going to be in the middle, and we're going to be their lender, and we're going to owner finance the house to them. And it's going to stop the bleeding. It's not the best deal ever, but we're going to be able to make some monthly cash flow on it, and we're going to hold this house, and it's going to work out. So that's the moral of it, is like, there's always ways out if you just, expand your knowledge and network and meet the right people. And that's what's awesome about this industry. So
exactly. And it's real estate. If you hold it long enough, it will come back.
It's forgiving.
Very forgiving.
Yeah. So we're in the process of that. Maybe there's some other people out there that are watching that are in a similar boat with houses that flooded during Hurricane Harvey. But maybe it is time to think of it a different way, whether it means putting in a tenant and renting it out, or doing something like this where you owner finance it out and become the lender for someone that can't qualify for a loan, right? So, we've learned our lessons, and like everyone does, and we're stronger and better investors for it. Obviously you can't predict storms like Harvey, and we just happened to be there when it hit, like so many. But it's what you do to rebound from it. And we've been able to learn some really great things from that are going to help us not make those mistakes again and be better later on. So
exactly.
Yeah. So other than that, I guess that's it. We got some great things going on. Anything more to add right now, Clint?
Not right now. I think we covered all of our housekeeping and everything that's been going on. It's a holiday weekend around here, so it's a short week. We'll
up here in Canada, we just had our Thanksgiving. We have it a month earlier than you guys. So man, I'm still full from the weekend, turkey and pumpkin pie and all that stuff. So I'm gonna probably go sleep some of it off some more.
You go to the gym, work some of it off.
That's exactly what I need to do. Run it off first.
That's right.
So guys, we'd love your feedback. If you have any questions or any even topics you'd like covered, we would love to hear your feedback. If you have any ideas or questions on any of the topics we cover in any of our episodes, please leave your comments down below. We would also like to offer a strategy call with anyone that might be new to investing, have any questions about any of the things we talk about as far as wholesaling houses, owner financing, private lending, fix and flips, just getting started, any of that stuff. We welcome you to book a strategy session or strategy call with Clint or myself on the phone. I mean, there's actually a link. I'm going to post it below this video. It's a link to just a calendar page where you can book a call. We'd be happy to help you get going or solve some of your own problems that you might be facing. So we welcome that. Other than that, stay tuned. Next week, we're going to have another episode.
All right. Thank you, everybody. Have a great week.
Take care.